Ladies and gentlemen, my name is Greg MIchalowski from ForexLive.com. Today's date, February 10th, 2015. I'm going to talk about the Aussie versus US dollars. Consolidation continues for this currency pair. Let's focus here on the hourly chart to start things off, because there's a lot to say from this picture here, isn't there? First off, on the top side here, we do see that we have a low here, a low here. We broke through that low with momentum to the downside on this trading day right here. We rotated back to the upside on the Reserve Bank of Australia's interest rate day here, where the market found resistance right against those old lows right here. So what was once support became resistance. We did it again here on the day after, and we did it again here. On Friday, right before the U.S. employment report, we did squeeze to the upside here. Let's discount this as position squaring, not really pay attention to it, but from a technical perspective, we did fail on the break above that yellow area, and the market rotated to the downside, as you can see in trading here today. We got close to it, but again, the market ran out of steam and started its rotation back to the downside. Now let's focus on the downside, our lows here, and you can see that there's a couple low areas here, really, probably three here, where we found support buyers. First, we have our low here from January 29th, and then when we go to the Reserve Bank of Australia interest rate decision day, we broke above that level. And where did the corrective low come down to? Right above that level, and the market based against that level moved higher. Subsequently, we did find another low here on the next trading day above this level right here, near the lows from this day right here. So seems to be the same pattern that we saw here: a low reached and then a early buyers here, low reached here, early buyers here, and then this other level comes in at the 77.46 level, which is lows through here, low through here, low here, and again today in trading here today we found support against that level. So we have defined a ceiling area and a floor area, and that range is not all that huge. If we were to measure the distance between this point right here at the, let me get it up there we go, from this high down to this low right here, it's about 139 pips. It's about 128 pips to that level, and about 113 pips. Not a lot of range there, but certainly up and down activity in the pair. Now, I want to bring up another level here, which is in between those two extremes, and that level is against the 100-hour moving average. That's a blue line in this chart. And if we go back to this point right here, where we moved above that 100-hour moving average, we found support, we found support, we found support, and on Monday we fell below that support and then spent 8, 10, 12 hours or so below that 100-hour moving average, finding support down here, but then broke above it, and what was once resistance became support again until today, when the market fell below, and then we've used the 100-hour moving average as resistance. So we've been going back and forth between extremes up here, extremes down here, and in between using that 100-hour moving average as a level to lean against, or turn the bias around on a break. And I think that's probably going to continue. We do have unemployment statistics coming out in Australia tomorrow. That would be 2 days forward from in Australia time. But tomorrow around 7:30, the expectations are for minus 5,000 versus, I think, a 35,000 gain. Unemployment rate is supposed to tick up to 6.2%. We know that the Reserve Bank of Australia cut interest rates. They're concerned about inflation. They're concerned about GDP. They're concerned about employment. They're concerned about the lower commodity prices and the effects on trade for that export-driven economy. So that is a concern from them. We know that Governor Stevens sees, or at least in December, he saw the value of the Australian dollar somewhere around the 0.75% was his neutral area. Since that time, commodity prices have come down from mid-December, but we are seeing a little bit of a rebound also off the low, so it may explain some of the consolidation trading that we're seeing here. And those influences can have an impact on the Aussie versus US dollar, all of them, from the commodity prices to the employment report tomorrow. So we'll be paying attention to our technical levels and ultimately looking for either a break to the upside or a break to the downside in this currency pair. Just to keep you informed on some of the longer term charts, Taking a look at the monthly chart here, the 200-month moving average comes in at the 77.87 level, and that happens to be right in between our 100 and 200-hour moving average. So we know already from the hourly chart that level is an important level, also important level from the monthly chart perspective. Also on the daily chart, be aware of this trend line here, especially if the market should go to the downside. If it goes to the downside in trading later on this week, we could see another test of that trend line. It currently comes in around the 75.37 level, moving down every day as the time goes by. So that could be a support target on the downside should there be further pressure in that direction. So there you have it, a detailed look at the Aussie versus US dollars. We consolidate back and forth. Not sure there's real trade in there, but there are some key technical levels that you as a trader can lean against and hopefully define risk and limit risk and look for that break, look for that extension, look for that momentum. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.